pretty okay, even though it was surely a volatile ride yesterday for the markets. We managed to cling on to that 24,550 print in the Nifty futures on the spot around that 24,450 odd level as well. It was banks once again, along with some of the financials, which actually held out. So a lot of these smaller banks are now which are seeing big bottom-up moves. Of course, HDFC Bank continues its support to the index as well. The GIFT Nifty this morning indicating once again a flat start, but I think that's pretty much par for the course. For global markets as well, once again, it was a day of record highs. The Dow marked its first close above the 45,000 mark, led by, of course, tech stocks. A lot of earnings-related movers are what actually propel the markets higher. And yeah, Jerome Powell reiterating that there is no rush to cut interest rates, saying economy is solid, but inflation pressures remain. And probability of 25 bips cut in December, that's now risen to 75.5%. The dollar index, of course, in the meanwhile is holding steady around that 106 odd mark or so. So yeah, nothing has really changed in the world from yesterday to today.
Yeah, and nothing's likely to change in a very meaningful manner, both in terms of news flow, but a lot has changed simply in terms of the construct of the mood. I think what is important here is that global cues are strong, local cues are getting better. We've seen a real comeback. I mean, it's been the longest winning streak for Nifty in last 2 months, and that is some kind of an indication as to how the market, which was in the throes of a panic low, has now made a majestic comeback. So that's how the market stack up is. I think if globally one looks at the setup, globally it is just simply status quo, and there is nothing new in the system which in a sense will generate upside momentum or really shake the apple cart, so to speak. The dollar index, which is the most important pivot point for us, which is the point which we've been making, I think is showing signs of topping out. Yields, the least are marching towards 4 or sliding towards 4, not 4.5. Crude really in that band where you can say that crude is in comfort zone. So global handover decent, Fed impact little on the macro, and Indian market are chugging along very smartly.
Oh yes, and you also have the OPEC plus meet, and the expectation is that the existing output cuts as well will continue. A larger than expected drop in the US inventories, and analysts as well are talking about how the tone this time around of the meet could sway prices as well. So that is going to be closely watched out for as a big data point globally. But that aside, let's focus in on our own markets, and we did manage to hold out in the green, 4th straight day of gains. It wasn't anything to shout home about on the upside, but nonetheless, that positive bias evident at 24,460 levels. And it was names like HDFC Life and HDFC Bank that had led the index higher. The PSBs as well did their bit, contributing up for the 2nd straight day on the trot. Real estate as a basket was in the green, and the banks really put their best foot forward. So 4 straight days that you've seen the Nifty Bank index gain. And it wasn't just the frontliners, the broader markets as well did manage to hold out quite comfortably. So 9 straight days on the trot that you've seen the mid and the small cap indices as well comfortably in the green. Nikunj, so given the kind of traction that we're seeing on the markets, the fact that we have managed to hold out within the broader universe as well, what does that indicate?
So, Avan, I think there is still some momentum there in the market, and it started with a comeback in Nifty. It moved to mid and small cap stocks, and now you can see that the Johnny-come-lately crowd seems to be getting excited. And we are looking at data yesterday that how the trader patronized stocks, which is what you want to call them in the market, the ranked mid-cap stocks, the ranked 2-digit stocks, starting with, let's say, R Power, Suzlon, Vodafone Idea, the comeback what we've seen in a stock like Yes Bank. Now, more than last 1 month, I think the change in last 2 weeks, I think is the one which we really need to focus on, because 1 month in a sense would really capture the decline and then the rise. But from the lows, which is what it matters, last 2 weeks, some of these stocks have made a comeback. So it's a typical market which is moving on. First, it was large caps which bottomed out, then mid and small cap stocks, and now some of the ranked mid cap stocks, the trader patronized stocks, are moving higher. So that's the setup of the market in terms of momentum and the mood. Then you look at the contribution. The contribution is coming from two stocks which really matter the most, Reliance and HDFC Bank. These two stocks have been marked underperformers for the better part of this year, but they've become outperformers. And typically when these two large stocks which have come out from a long winter, when they discover momentum, it's going to last for next few days. So that will make Nifty look rather exciting from a market standpoint. And third is the real outperformance which is coming in banks. That's courtesy because FIs have stopped selling. So we are in a good shape right now. There is no news, flows, technicals, momentum, participation, everything seems to be aligning well for us now.
Yeah, in fact, if you just look at the kind of moves some of these banks have seen, and not just HDFC Bank, but the smaller rung as well, and how they've performed in the last 4 sessions. Even names like a Can Bank have jumped up about 6%. You have a BOB, which has given you a 5% return. Of course, there's mighty HDFC Bank, which has moved up about 4% in the last 4 sessions. IDFC First, PNB, they've all held out very well. And remember, names like Federal Bank didn't even fall in the market correction. They continued to scale record highs even then. And the Nifty Bank, since November 21st, the PSU banks have moved up a lot more higher, giving you a good 13% jump up. So yeah, the turnaround now seems to be spreading more and beyond even HDFC Bank.
Yeah, that's typically it happens. I mean, the Piper effect, what we say, that you need to have a leadership which comes in, and the leadership then in a sense gets cemented further. Now, will this rally really go down the barrel? Of course, technically it will. But is it justified to start looking at small tier banks and NBFCs? I think it's too early to say that. Large cap stocks themselves are not expensive. That's the space where I think institutional activity is also going to be there. So rather than just going down the barrel and looking outside the comfort of the top 5 or 6 banks or 2 or 3 NBFCs, one is better off in the moment, at least in financials, sticking on to the large cap banks and large cap PSUs, because that's where I think there is margin of safety. Because for the smaller banks, there is a genuine issue in terms of the liability franchise, CASA, unsecured loan, MFI. So those problems are not over. So just because HDFC Bank has moved up, logically in terms of the technical setup, other banks should see an halo effect, but I think that may not be a good trade. Second, I think some of the large cap underperforming NBFCs, especially Bajaj Finance or Piramal, they are also looking good for a move. And third pocket, which has been deeply ignored, and I think it's time to switch now, is that you are better off perhaps booking some profits in the capital marketplace, because that's where I think the big bloating has happened in terms of valuations and in terms of participation. So if you own, let's say, mutual fund stocks or AMC stocks or CDSL or KFIN, I mean financial inclusion stocks, then it is better to flip or book some profits and move to insurance, because insurance stocks at these levels, considering that where the sector is moving, the news flow, etc., I think there is a tactical trade coming in insurance.
If you like this video, then like, share and subscribe to ET Now.